Joining me now is Brendan Capstick from Nedbank Private Wealth to give us his take on markets activity. Brendan, thanks so much for your time this afternoon. Maybe let's start with how you're positioning yourself in markets at the moment. Here we are, entering the fourth week of the U.S. government shutdown. Investors are also turning their focus to earnings season picking up in both Europe and States. And we also have traders eyeing inflation numbers ahead of the Fed meeting next week.
Yeah, thanks for having me. Good afternoon. A lot of moving parts in the market at this point. Volatility is back, of course. We saw out of the Chinese-US trade tensions. I think that's been a headline grabber the last couple of weeks. President Trump came out yesterday mentioning that more positive sentiments regarding a possible deal going forward, and we saw risk on coming back into the market yesterday. It all revolved around the rare earth discussion of China exporting rare earth. They produce around 60% of the world's rare earth materials and critical minerals, which is important for defense magnets and semiconductors. So I think that's really been a topic of discussion, and we saw this President Trump going out and doing a rare earth and minerals deal with the Australian government. So I think there is some jockeying happening in that space, and on the back of that, we did see markets really respond strongly yesterday on the back of earnings, and a lot of these earnings are the S&P beating expectations. So with all the uncertainty in the market, equity and risk sentiment still charging high into earnings.
And talking about markets and what's been boosting markets in particular, Apple reaching a record high overnight, and that, of course, filtering through to that positive close we saw in the NASDAQ yesterday. Earlier this year, we were dealing with sharp declines in Apple's share price on the back of tensions between the US and China, because Apple makes most of its iPhones in China. We did then see Apple moving, a lot of parts and trying to then develop more capacity in India. But that's still a sour pill for Trump to swallow. On the other side, moving on to this week, that iPhone 17 out, and we're seeing sales really doing well in both China and the US, and that, of course, boosting the share price. What have you made of Apple's performance so far? I mean, there's also been concerns around Apple being the laggard when it comes to AI as well, when you're looking at those tech counters.
Yeah, correct. I mean, again, all the big Magnificent Seven, a lot of them report next week, so we'll see on what happens on that front. But to your point, I mean, Apple reaching an all-time high again. I think Tim Cook has been proactive as a company level, engaging President Trump on bringing production back to the US. I think that has helped the Apple share price, and of course, on the back of these strong sales of the new iPhone 17, the concern in the market really is the AI strategy. But within that ecosystem, I mean, there's various platforms and softwares that can be used inside on the Apple device. So I think from that perspective, they're not that far behind. They still generate a lot of free cash flow as a big company. So for them to partner and develop something, traditionally they always have built in-house. And as you've mentioned, they're one of the companies that's really not partnered, similar to the other large hyperscalers in the market yet.
And let's move over to the mining sector, where we've had a few operational updates coming through, starting off with BHP, the diversified miner, saying, it started its financial year on an upbeat note. What stuck out for you in particular?
Yeah, definitely. I think the copper production increasing really is a positive on that front. Their mix is not similar to some of the others in the market, the Anglos and the Glencores, because I don't have some of the metals exposure. And I think we all know that has been the area of the market that's been exceptionally strong. So good to see the copper production increasing. Copper price has been resilient, as well as iron ore production. And iron ore pricing seems like it's moving in a positive direction. Post we saw GDP figures from China out on Monday, softer than expected, but in that industrial production really looking positive. So hopefully that filters into the updates to BHP.
Now, while BHP benefits on the back of, higher copper production, over on the other side, we have South 32 faring well on the back of higher manganese output. Your take on that update?
Yeah, so I think as I've just alluded to, I mean, it's not something we do follow closely, but a little bit more
Okay.
diversified on the smaller basket side of things. Price has actually, responded in that regard. But what I've initially mentioned on or mineral dependency globally, I think these companies such as South32 are going to become more in focus as rare minerals and rare earths become more important. So we like the mix of South32. It's not something we do follow closely, but yeah, I think they're playing in the right space from a metals point of view going forward.
All right, and let's bring it to the retail sector. TFG really being punished today. The last time I checked, that share price was down over 12%, Brendan. Sales being boosted by the recent acquisition of White Stuff in the UK. But when that is removed, we are seeing sales quite subdued. And the group also warning of a decline in HEPS. Quite disappointing, right? And, I want to get your sense on whether this also speaks to the current economic climate where we are seeing consumers spending more on necessities.
Yeah, good point. I mean, concerning from us as a South African investor, just to see an update or trading a statement, guiding low between 20 and 25%. The SA retail and SA, let's call it financials, value play has really not worked out this year, and these shares are down quite a bit. Just looking at the update, I mean, just the group sales up 12.7%. White Stuff from the UK still delivering good momentum, as well as their bash and online penetration. I think a positive area of that update. The South African environment really seems still benign and slow, even in the backdrop of interest rate cuts that we've seen into this update. So concerning to see the price down around, like I mentioned, 13 to 14%. It has been affecting the whole sector with, I see Mr. Price also down around 4%. So, that lower expected GDP figures out of the African economy is a bit of a concern if you look at the retailers and effectively our banking exposure locally.
All right, let's hit pause on the conversation then, Brendan. Before we move on to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
Yeah, so another SA in play today. I think Raubex for us offer a compelling short and medium play on SA fixed capital formation, especially if the private sector comes to play. And the private sector hasn't invested in SA for a long, long time. So they do have a, call it construction, infrastructure part of the business, which we think will deliver a very good set of results. And at the same time, their Baobab business, which is predominantly in chrome, we expect is going to go from loss-making to profits in the next set of results. And on top of that, we expect CapEx spending to reduce from Raubex. So that's also mean that better high free cash flow for investors going forward. And we don't think this is really reflected in the share price. And as a result, we think it offers a good, compelling opportunity at the moment.
And here's another one, but the difference is, their earnings have doubled, and yet the share price is almost the same. So it's become, it's almost just too cheap. So, I'm a little bit, I'm not ashamed to say I'm a little bit confused by the state of world markets right now. There seems to be a real risk on almost in markets we trust kind of mentality. That kind of environment scares me, but you want to have chips on the table. And I think something like ABSA, if they're going to deliver almost $30 of earnings to December, at 190, that valuation is, I don't want to call it obscenely cheap, but it's I think there's a massive margin of safety. And the other margin of safety is in the divvy. If you're going to get $16 in divvy, you're looking at a divvy yield of almost 9%, even after DWT, you're beating cash. So I think it's just too cheap to ignore. And that's really for people who say, I don't know if I should be buying Optasia or Naspers or gold shares. I just want something that I understand. That's really what I was looking for.
So Graham and Alex betting on SA Inc. with ABSA and Raubex. Are these counters you follow closely, counters you like?
Yeah, maybe to touch on ABSA, financials, local banks. We like the sector. I've just alluded to, there is some growth concerns, but I think what we're seeing is that they are so cheap at these levels. Just looking at ABSA trading at 0.9 price to book, that's 20% discount to its 10-year average. Paying you a 9% dividend yield. Got new management on board. Earnings before on the previous cycle was around EPS around 17%, and they've got a ROE target of 15%. It's a lot of good momentum in all these metrics, but the share price has really not moved, pretty much flat for the year. But we like the sector. And on Robex, I mean, it is a SA, let's call it a SA local growth story, looking very cheap at five times forward. But it's not something we look at closely in our world, a little bit small from a liquidity point of view.
All right, Lynn, then let's get into your stock pick. Where are you seeing opportunity at the moment?
Yeah, we're looking at the British American tobacco today, locally listed industrial. So again, leading into that defensive stance, as I've mentioned, it's down 10% since its August highs. It's trading at a forward P of around 10 times, so not demanding versus a peer group. And of course, offering a strong dividend yield around 7% in hard currency. So it's definitely paying you to be invested. And just looking at the business case, it's got a lot of free cash flow inside the company, generating strong free cash flows, buying back shares, as well as the next generation products, which is their growth lever into the names such as the modern oral segments, which is high margin. So that will be the growth lever going forward. So from these levels, I think you're getting a good, attractive entry point into a strong cash generative rand edge in British American tobacco.
All right, let's leave it there. Brendan, thanks so much for your time and taking us through trade at midday. Now, that was Brendan Capstick from Nedbank Private Wealth.